ericmoadetmoadet.com with continuation of this MACD support or MACD rejection at the zero line. We're going to take a look at one of the bigger commodities in the market, of course the biggest commodity, which is gold, and we are looking at the GLD. This is on a weekly chart, so let's see how this could have been used to at least tell investors what to expect in the marketplace. So let's go and just make it as simple as we can, and we can see here, if we take a look at the GLD behavior, we can see that here we went above zero and back below it with uniform activity. That was a short-term high, so that worked as a sell signal. Again, even this here was uniform activity above the zero line and back below it. So as you move below it, you see that was a sell signal. The market did stay down there. We have another instant of uniform activity above the zero line and back below it. And again, the zero line, if I can just draw the zero line, it's right somewhere around there. So that's where the zero line is. And we can see as we move back below that zero line, there was a sell signal there on a weekly chart. And beginning of 2015, went above zero line and back below it with uniform activity. So even that move back below with uniform activity was a sell signal somewhere around here. Market has been down since then. In fact, you can even see another rejection of the zero line somewhere here, which was good for these highs here. So yes, the method that we are talking about here could have kept you out of this gold market over the last 2-3 years based on how it has been responding on the zero line. Now if we take a look at the main MACD somewhere and we draw this zero line, you can see a couple of here try to move above zero and failed. So let's change colors here. We tried to move above zero right here, which corresponds with these highs. Market went down. There was another rejection here, which was these highs. So a simple strategy of observing how the MACDs are behaving around the zero line can tell you whether you should be long a trade or whether you should get out of a trade. In this instant, we are seeing that this was good enough to tell you when to get out of this gold trade. Even though we are talking about the MACD, take a look at this uniform activity on the RSI. Uniform activity above the zero line and back below it, which was again corresponding with this rejection here on the MACD zero line, and also confirmed by this uniform activity on that MACD line and that sell signal here. So all those 3 points, MACD uniformity, MACD rejection, RSI uniformity above the 50 line and back below, gave us this sell signal there. And also we see here that there was rejection by the RSI on the 50 level, which corresponds with this rejection on the MACD, which gave us these highs. So we can also incorporate our understanding of the RSI to see whether we should have got out of that position, which was correct. Let's take a look here quickly at silver. And on the silver, this is a 3-year weekly chart for silver. Just want to show you here quite simply here, uniform activity above the zero line. And so let me show you the zero line. Zero line is somewhere there. And you can see this was good for that high there. Uniform activity above zero and back below it. This wasn't the most uniform activity, but I can say, to me visually, you can still see that it's almost uniform activity. But now this one here was definitely uniform activity above zero, back below it. So as it moves back below zero, that's a sell signal somewhere there. Uniform activity again above the zero line and back below it for those highs. Rejection with uniform activity at the zero line for those highs. So very simple strategy. And we can see here that the main MACD did show resistance at the zero line, and that was good for these highs. So this MACD strategy of rejection or support at the 50 line is very instrumental in telling you how you should position yourself. And again, we see here uniform activity rejection at the 50 level of the weekly RSI gave you a short-term high, and again uniform activity rejection at the 50 level, which also gave you these highs here. So lots of reasons here on how you can use the RSI and the MACDs, but for the purpose of this series, the MACD, uniform activity rejection or support, can help you gauge which way you should be positioning yourself in terms of buying or getting out of a security. Eric Mwathe, Mwathe.com. As always, good luck, peace, and blessings. EACS.